All right, good evening and welcome to the end of day review for today. And today is Friday, December 06, 2024 right there. So and today is a non-farm payroll day, Friday. So big moving for today. Huge move at 8:30 right there. We go to the charts in detail later. But the whole week is set up um, for the move yesterday and today. You can see that. So basically, Monday and Tuesday and Wednesday also set the liquidity for today move right there. So we are in week 49, so 3 more week. Next week with 52 are right there. So it will be 3 more week we close out 2024. And this month we have a end of quarter option expiration day. So expect a lot of volatilities, price action. Alright, today is the last non-farm payroll for this year. Next one is gonna be on January 10th right there. Next week we're gonna looking for the CPI data. CPI come out in December 11. Right here, that's the CPI data. Yeah, so that is for the economic event preview right there. So now go into the chart. Before we go there, let's just look at this one. This one we take a screenshot, right at the first 30 seconds when the 8:30 data release. So what do we see from here? Very interesting. Let's see from here. Okay, so basically we see the yesterday PM range right there, here range there, and you see that the open at 9:30, not 9:30 but 1800 open right there. That's the open at 1900 right there, and it tests from above. So it may tell us that all right, it may break it, and then we see another. Yeah, it did break that level at. It did break that level as right after the London right there. Right after the London. Yeah, the timestamp of this candle is 5:45 right there. So if you see the level right there, right, this is the level at let's make it a little smaller. So you see the level right there. That's the Friday PM or the Friday low the same, because the PM is the huge range right there, and you see that it tests one twice and it break one, break two. So the second time it create a reversal right there, breaks, test from below and reverse. That's type 2 right there. And the first 30 seconds when the 8:30, you see the 8:30, that is the 8:30 right there. Is the 8:30. Non-farm payroll. That's the candle at non-farm payroll. Yes, so for 30 seconds, right? So 30 seconds of 830. Well, it will look like it's gonna break. It look like a short setup. What do you think? You think it's gonna be short? Yeah, we think so too. But it happened very fast. As soon as this go down here, and then it flip right away. So we check this. We have to do the rewind the tape to take this perfect picture. So we want to learn the lesson. So all right. So because it's moved very fast. So the only way we want to go long, right? If flip, then we have to put a buy stop at this candle at 18 right there. Buy stop at that. Then it will carry it into the trade. If it's flip right there. And yeah, you see right there. It before that, right before the 8 excuse us, is 9 the 830, the 815 already test from above. So this one it break, but if it flip, then it's gonna be go up. That's the idea, right? That's test from above, break, then we can have a strong signal to go bullish right there. Okay, so now go into, so the point we try to make is that the whole overnight markets and the London, they all keep like that, right? Keep the liquidity at around the 1800 candle range right there. It's just amazing. And then it go into rate the sell side, and then it flip. You're gonna look at it here. We pause right there at 9:30 right there, at 9:30 for 30 second right there. But as soon that you see that it flip, wow, very fast. You see that it flip right there. Yes, it's flipped just quick like that. So you see that it flipped very fast right there. Boom. Yeah, it not even go to the minutes yet. So you see that? So it just rate the sell side right there, and this is supposed to be break this level. Then it flip. It tests from below now. Basically right here it tests from above and tests from below. So it can go either way. And you see that it pulled back a little bit. And at this moment we thought, oh wow, maybe it's gonna flip and short. But let's see what happened. Again, wow. See that? It come back up. It always do that. At least 2 times before it's pushed higher. And this one not even go to the first minute, not finish the first minute. Yeah, I think we need to go. We need go in and go long right here, because we see that alright. So that here, it rate a sell side. So this one expansion retracement, and this retracement gonna go to a expansion move. Yeah, so let's fast forward a little bit. You can see that, yes, it hit all the way to hit this level right here at 60.99. So basically after right here we have a good case to go on, because you see this huge expansion, then it gonna hit this buy sell side liquidity. You see that it rate this 1, 2, 3 times right there. It cannot break that. So it's gonna rate this buy side liquidity. When we long right here, we got a little bit nervous, so we get out early. So that's an idea right there. We get out early. It's a very good lesson for us to learn, especially right here. If you watch carefully, you can see that the whole night in Asia and London, it just hold at this bottom of this range right there for the BM range for the prior day, which is on Thursday. Then boom, it rate the sell side, and boom, it's gonna go and rate the buy side liquidity. Basically, it rate both sides of the liquidity. We did not recognize right away, but around 12 we can start see the pattern right there. So basically, because we see the fellow gap right here, we thought, oh, okay, it may go this fellow gap and then retrace, but it's very strong. It go take this one. So now we learn the lesson that before the day before, watching for the prior day BM range, especially before the non-farm payroll, and looks how they build liquidity. Right, they build a huge. This is consolidation right there, expansion, consolidation right here, and then you see the magnificent move right here, a flip right here. This is supposed to be expansion, right? You have expansion, consolidation right here, and then expansion, but it got flipped. It got into reverse, and the next target gonna be the high of this range or the buy side liquidity right there. So his whole beauty to see how the engineer liquidity, how the algo engineer liquidity right there. So it set up the range the day before, and then it accumulate right here. It accumulate the liquidity here, and then right here the manipulation move right here. It flips, and then boom, it go right the other side of the liquidity. And this called both side liquidity rate right there. We did go long right here, and then right here we thought that we were gonna short them, but it didn't go our way, and it come back, and we didn't bother to go long neither. But we did go short right here, and we have a good run right here. And then we make mistake. I think we make mistake down here. Okay, so right here we okay, so right here we thought that alright, so it's have rejection. Now that's what we anticipate, but we have to be careful because it's not only injection, but also mean a bullet will test from below, right? It tests from below, and it's gonna break it. So after expansion, it's gonna go to retracement. So don't short. Yes, we did short right here, and it did go to our way at first, and then it flipped. So next time, be careful right here, because you go for you thought they're gonna short it, but when it hit this target, we need to get out. We kind of try to be right. Yeah, markets when market tells different, we have to get out, but we try to be right. That's the reason why we kind of slow to exit the trade, and we paid the price for that. We will show the execute of that trade later, but we're not right now. We just want to see, the price action first. So yeah, we short right there, and we didn't get out when it hit this target, and then it flipped back on us right there. You see that? And yeah, the next candle take it out right there. So right here we see right, so maybe you know, it can go either way. So we wait a little bit, but as soon as we saw the candle went out, we should go long right here because it have a huge move up here. It take the buy sell liquidity. That's the lesson we learned. But at that moment, we so caught up with our emotion because we did have a huge gain and then we give back. That is the challenge for us. So we have somehow every trade we need to reset our mind, right? You cannot let the prior trade impact out negatively. As soon as you saw the market tell differently, we need to switch to long right away. It's not easy. You see that? Wow. Yes. We did go long and yes, we did go long right here. We did go long on this trade, on this one, perfectly. We should let it run. It's gonna hit this, but we get taken, so we exit early. Yes, you see that? Boom. But as soon as it hit that, you see that it's retraced. And right here, all right, so we short right here. Perfect, we short right there. We know that it tells us test from above, it's gonna go down. But we go a little bit too early and we put a stop loss too tight. That's the reason why we get stopped out, but we have a right, you see that? Yes, we should stop out when it just retraced, but eventually it went out. Yes, you see that? Eventually it go down. And but anyway, we lost that trade and we try short right here again because we see the huge bearish signal right here, test from above, and we're going. And we should let this trade hit our target, but we get scared when it get a retracement. But you see that it comes out again. You see that it hit the target. And it make another leg down right there. It hit the target that we aim for down here. I think 80. We aim for 90, but it did not. It didn't happen. The 92 is the perfect right there. And then it retraces right here. Oh man, you know what? We make a huge mistake right here. So right here, our thought is that, all right. So you see the setup right here. The fall breaks out, reversal. Right, break test from below and then reverse. So we thought it's gonna go and make all the way up here again, but it's too naive because it's Friday and you see that it's 14. What the time right there? It's in the PM. Yeah, it still have another 4 hour or so, right? 3 hour, but it didn't move much. We make mistake. We go along right here and we pay for that. As soon as we go along, boom, man, it feels so, frustrated right there. And then we wait for this and then wait for this candle come. We thought that it's gonna make another leg up right there, but it did not. So we get out. It wouldn't get out. We pay a huge price right there. But eventually it hit the 90. Yes, it hit the 90. And then it retraced from there. Yeah, so if we look at the candle set up at the 9:30, it can give us some idea right there. Right? First, it break that candle, it break that candle, and then it retrace, and then it's closed below this candle right there. Or the candle after expansion move can give us some idea that the price gonna come back at this level and move around that. Let's look in the chart so we can see. So we can see that the candle right out expansion move right here. You see that after it reached the high, right, the price exactly come back at that level. So the candle after expansion move very critical, give it an idea. Expansion, and then you see that it gives an idea that the price gonna come back there. It's like a magnet right there. And we saw this phenomenal all the time. Let's look at the last time we have. So here's how the liquidity is was engineered last month in November 1st when we have a non-farm payroll. You see the similar idea right there. The day before, which is Thursday, you see that it down move right here, right there, and you see that London and Asia just keep around below or between the PM range right there. But the difference is that the 930 did not go and break the social liquidity. The reason why, because the PM range is so small, because the sell-off on Thursday start in the morning, in the PM, excuse me, in the AM, so the PM range is not big at all. You see that? That's the reason why it's a little bit different. But you look right here. Yes, that's how it look. Yeah, because the day before the Thursday before that is a huge sell-off. So today, so the non-farm payroll last time is just a test from below. This is a hammer, inverse rate test from below. That's how it's become. And the next day it just rally. Yeah, the next move is huge rally right there. But you see right here after 8:30 it make the retracement 1, 2, 3, and then 9:30 it really explosive move right there. But after that it retraced back to the 8:30. The 8:30 today is so much bigger than the 8:30 last time. You see the 8:30 is huge. So last time it come back all the way around here, 8:30, but this time it's just around the candle right after the expansion move. You see it come down more than that, right? For today is more solid. So basically if I this support level around here, it did not go all the way here. The reason because it's already reached the sell side, so that could be the reason right there. What lesson we learn? And right here we also have is the type, you can call type 3 reversal right there. Break, all right, reverse, break, reverse. So that can tell us that double break and double reverse, but it is a short setup. There's type 3 reversal right there. Yeah, we did have this setup today. Yeah, here's the on Wednesday this week we have the same setup, but in this case it's a long one, which is break and it reverse, break and reverse at this level 6084 right there. So basically we have a long setup on Wednesday, but today we have a short setup type 3 reversal. A short setup, the idea is the same. It's a break, but the break and reverse happen, continuously. That is much more better. So basically, or better or worse. Either way. So basically, you have break right there. Break at um, 8 at 9:45, and then you have reverse right away at 10, and then you break the level again, and then you have reverse at 10:30. Right, you break at 10:15 and you reverse right at 10:30, and this candle give a this candle give it another signal right here with test from above. So if we make the entry right here, then we can go and follow this candle, and that's what we did. We did short right here, but we put a stop loss two sides, so we get stop out. Then we wait, see how this candle behave, and then we will come in a short right there. We aim at 90 down here. Yeah, 90 around here, and it did hit that level if we just let the trade run, but we got chicken out, so we stop out. But you see that the low right here is exactly 90. Yes, it hit the 90 our targets, but I think the best target is around 92 right there. All right, if we watch it again, we can see that how liquidity were accumulate and manipulate right there. So first it trade the sell side, and then boom, and minute it run the buy side liquidity, it reverse right away. And look at the 10:30, it give a signal that it gonna reverse. It's similar like last month right here. You see the 9:30 right there, the 10:30s, it gives us a 10:30 right here. You see that 10:30, it also reverse right there. It tells us reverse, but it make a little bit retracement right here, and boom, at 11:30 it come down. It create a very nice setup right here, which is a break test from above and reverse, which is type 1 reversal right there. But for today, it create a type 3 reversal at 10:30. It's similar, right? You have a first expansion and a retracement before 9:30, and it shoot another expansion at 9:30:45. Boom, 10:30 it reverse. It's similar like last month. You see that 8:30 and then retracement 9:30. Boom, 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 boom. At 10:30 it reverse. But the reverse from today is a little bit different than last month. We can put side by side so we can see how different it is. So at 10:30 it reversed hard last time, right? Right here at 10:30 it gives us the signal. It not reverse hard, yes, because the way it create the setup formation very early for today or this week, but last time it formed a little bit later than it about 11:30 right there. So break test from up reverse, but the 10:30 give us the indicator. Same idea right here. 10:30 give us the indicator right there. 10:30, 10:45, and 11. Boom, and we should let it run. So that is a huge lesson for us to learn about liquidity, how it's set up, and we can compare contrast with last time. Let's look at the week before this, which is I think October. Yeah, here we have for October. The October it kind of a little bit different because you see that the day before is it kind of in a tight range right there. It's different from October, different from November and December, which is this month. Uh, the day before is kind of consolidate right there, and you have Asia it moving up, and then a retracement on London, and then boom, it make expansion. As soon it make a expansion at 8:30, right? It continue expansion. That give an idea right there. If it continue expansion and looking for reversal at 8:30, that is the lesson we learn. But for the today and November, the opposite happened. After the 8:30, it had retracement. See that? This is last month, and that is this month. So after the night 8:30, it had retracement, then looking for expansion at 9:30, and that's exactly happened for last month and this month also. You see that after expansion at 9:30, it doesn't have a follow up. It have a retracement. Then watch for the next move, huge move at 9:30. But for the October, so here's on our right, we're talking about right here is the November, and here's is on the today, which is December. We look back another month, which is October 4, with another non-farm payroll. We see the opposite happen right here. So it give an idea how to trade a non-farm payroll right there. So basically after the 9:30, if you see another expansion candle, then looking for a reverse at a 9:30. But if you don't see a retracement after the 8:30 expansion move, then looking for expansion at 9:30. And right after 9:30 expansion, after the liquidity go rate, then looking for a reversal. In this case, looking for a result at 10:30. In this case, it doesn't have the liquidity. It does not rate, the high, right? The high of Friday, but you can see that it rate internal liquidity, right? The external liquidity rate, and this one in this case it rate the internal liquidity rate, which is the high time frame level. High time frame level. Yeah, on the November 1st last month, it didn't rate the external liquidity. It just rate the internal, which is in this case you can see the fair value gap right there, and then from there it reversed. So very very useful for us to watch how the liquidity will rate and wait for the liquidity will rate it either external liquidity or internal liquidity, and then see the setup then going. We have to be patient with the setup, and patient with the market, and above all is patient with ourselves right there. All right, let's see the trade we took today. All right, here's the trade. So right here, I think we trade this overnight. Is that overnight or at 8:30? Yeah, this is 8 right before 8:30. We see that we thought, all right, it's gonna be expansion, and it's gonna be consolidation, and they're gonna make another leg down right there. That is our thought when we try to go in a short right there. And then you see that we anticipate short because we thought this is gonna be a retracement, and you see that we thought this gonna break down at the open because we see it test from below. So that's our idea. But as soon as the 8:30, the non-farm payroll, it check it out right away, and boom, we go long right there. It gives us a very solid. So we think that it's going to be expensive up, so we switch to long. But as soon as we go long, it's go again right there. It happened. We had to sit through fluctuation. So we aim at 6108. All right, 6108. If we go to the chart 6108, we will get it. Yeah, just stay right there. 08, yes, we will get it. Our original target right there, which is 3R 15 point, it will get there. Yeah, we add 10 more contract right there, and as soon as we add, it go against us, so we have to move our stop loss. We get so nervous, and go sorry here. I think we take early profit right here. We're like, we got chicken, right? Let's see, I think we take out, right? We scale out right here. We take some early profits because we entry late, a little bit too high, and we want to lock in the profits.
Order filled.
Yes, so we take early profit. We like only one contract. We should let run, and it's gonna hit this, but I think we chicken out. We move to break even, and then eventually we close. So that is our first two trade right there. Let's look at the next trade we take. Oh, so right here, that is the blunder, is the mistake right here. Right after a huge move rate expansion here, and it tests from below, we should not take a short right here. As soon as we take a short, we realize that, but I think that's next time if we realize that, just get out of trade. Don't stay in the trade. But that's the lesson we learn, and we need to control our impulse too. Because you look at the contact right here, it's huge expansion and it still tests from below. So not quite take a short yet. So don't do that. That's a lesson that we need to take ourselves. Yeah, right here we need to take a note right here also at that moment. We say, test from below, it's gonna break it. So it's gonna go up and break that. Test from below is a bullish signal. So just be patient, not short. Yes, so that's another note. We put ourselves right there. So we go short right here, and now look back, we very crazy. We add 10 side, we jumping very big right there. That's another blunder right there. We cannot just swing too much too many. We need to stay back and be patient and trade less. That's the lesson we learned today. See that? We give back the heel right there. And as soon as you see that test from below twice, you're gonna break it. You're gonna make another expansion move. Yeah, we check out right there. So basically, and right here we go short, and it hit. We put a target 93. Yes. Yeah, we should give it 90. And here we need to get out right here. We're thinking about get out, because it can flip on it. but for some reason we didn't get out. For some reason we reluctant at that moment, and we had to pay the price. You see that? But if it come back, then I think we exit the trade, and then yeah, we take quick profit there to get out. And this one we go long, perfect. We go long. It's a beautiful trade, and we should not it run hit the buy sell liquidity right here. And I think we didn't do that. We just chicken out. We take early profit. Oh yeah. When it retraced a little bit, we got scared. We got scared. You see that? We got scared. Okay, come back. I think we check out profit right here. Yeah, we take the profits right here. Let's see, we take the profits right here.
Order filled.
Yes, we take all the profit right there. We scale out right there. And let's see, okay, let's go to the next recording. So 2 trade I think should be good enough. I think we have to find a way to limit our trade. We trade too many trades. We have to control our sell right there. So perfect right here. We short them. We see the signal short right there, test from above. We going. We short this guy and perfect. Right. Let it run right there. You know that we move our why we move our stop loss right there. That's the thing we have to think. You don't move stop loss right there to let at this level because it's gonna test that level. Because we thought, oh wow, it may not test it level because it haven't tested level before, so it may test it. The level it tested before right here, the equal high right there, then we have to put our stop loss right there. But we make mistake, and you know what? It's a costly mistake. You see that? Just hit our out, and then it go back, and now we have to re-enter the short again. Okay, but perfect. You know, it go our way. We need to get this guy run, but I think we also chicken out, so we take early profit. We take early profits. Yeah, we take early profit right here. Let's see, did we take early profit, or we will in the next video? Yeah, I think it will be in the next video. I haven't take profits. That's this one. Yeah. Okay, so we didn't take profit on that one, and at one point it hit what right here, it hit almost 4,000. I think is the good way to take profit right there, but we didn't take it because we look at the 8 right here, this number, which it may read this number, so that's greedy right there. We should take out the profits. It's very nice move right there. So it's 10 point right there. I mean, is that 10 point? Yeah, 10 point, almost 10 point. And we didn't take, but right here we didn't take the profits, and then when it flipped back a little bit, I think we take out right there. So we should take profit right here, but no mind, right? You have to do what you have to do. But if we let it run, it hit our level right here. That's the point we try to make at 60, right? 60.90. That's the level that it hit 6090. Yes, it hit right here. The low of this, yes, 6090. It hit that 14:30 to 2 p.m. right there. So we have to wait. Well, another 3 hours or so. It gonna hit. Yep. So here's the last blunder trade we took. Basically, before this trade, we should be good enough, have good handsome profit right there. But we got greedy after we see this explosion move. If we want to trade this, we have to go entry around here, because you said break, test from below, and reverse. That's reversal type 1 right there. Yeah, that's a reversal type 1 right here. It's a long setup. Break, test from below, reverse. We made entry right here because we do something else, and all of a sudden we look back at our screen. We saw this, and we feel like a mixer now, so we jump in and we go along. That's it, a mistake. You see that? We make mistake, and then you know what? We go in right here. We add more contract. You see that? The minute we scale in, we get in trouble. Boom! It go back again. Look, we thought it's gonna hit the level again. It's not. It's a rate the sell side, rate the buy side, and that's it. It come back to this level. The candle right there. I look at the charts. It come back here. So it's a huge lesson for us. So we have to control ourselves right there. The more we understand about liquidity, the better for us to control our impulse, control our manage our engagement. We cannot just engage anywhere or anytime. If we want to become a better trader, we have to spend more time on observing instead of trade every move. Yes. So basically, don't trade the market. Just trade our setup. When I set up there, in this case, take it, but don't chase right here if you miss it. So here's one of the blunder lesson we learned today. The minute we go in, we get trouble. And look, wow, look at that. We move our stop loss. That's another action right there. But anyway, we thought that all right, it maybe go back again. But the minute we saw this ugly candle come down, we thought to ourselves that we have enough. Let's get out, and we did get out. It's not enough for today.
Order filled.
You see that? So it's above 3,000 something. We give it all back. But anyway, we pay all of that to learn the lesson. Right? We have to patient with ourselves, patient with the process, patient with the market, and above all, patient with ourselves. We try to improve every day. It's okay to make a mistake. It's part of the process. So, don't lose sleep over that. All right, thank you for your time and interest. Always appreciate this opportunity. We do what we love, then success is coming our way for sure. Day by day, little by little, in every way, we're getting better and better. Have a great night, and see you next week.